Hey, everybody, it's Russell Gray, co-host of the Real Estate Guys radio show, and we're here today with an episode of Ask the Expert, and we're going to be talking about building, specifically build to rent. And so our resident expert for today's episode is Chris Funk. Chris is the founder and CEO of Southern Impression Homes and SunCoast Property Management. He was one of the featured contributors in the build to rent series that we did. So if you haven't seen that, you can send an email to BTR, like build to rent series, at realestateguysradio.com, and we will get you that information. What Robert did in that, Robert Helms, host of the Real Estate Guys radio show, he interviewed a panel of experts in different markets, but all in the build to rent space, which is a really, really hot space in real estate right now. So Chris, welcome to the show.
Well, thank you for having me. Good to see you, sir.
Yeah, we're excited. What we did is we asked folks who had watched the Build to Rent series and folks that had requested information on build to rent real estate through our special reports library, which folks can find at realestateguysradio.com under the resources tab. We have all kinds of free reports in the library. I know, Chris, you've got a few in there too. And of course, we've done episodes on our podcast with you. But people have questions. And, you know, when you go to a seminar or you end up listening to a live call-in type show, it's fun to be able to call in and talk to the experts. So we've been looking for ways to engage our audience and let them ask those questions. And so we had some folks submit some. And so if you're not on our list and you want to be able to ask questions, that's the way you do it. So if you order the BTR series, if you go BTR series at realestateguysradio.com, then you'll get on the list. And next time we do an Ask the Experts on this particular topic, you'll have an opportunity to submit your question. Of course, you can always go to the feedback page at realestateguysradio.com under feedback, or send your question to feedback at realestateguysradio.com, and you can submit it that way as well. So the first question here is from Deborah in Alpharetta, Georgia, kind of near your part of the world. You're out there in Jacksonville. And she says, does it make sense to build in the current market situation? With new construction, I'm skeptical whether return on investment would make sense. And of course, I think a lot of people are feeling that way. In fact, I think a couple of the questions are in that vein. So you're out there in Jacksonville and it's booming and you guys are building like crazy. So obviously you think the numbers make sense. So what's going on inside your head? What makes you think now's a good time to do this?
Well, a number of things. And, you know, and you and I have talked about this a lot in the past, but, you know, I see the real estate that we're building as a great hedge against, you know, potential inflationary events that might be coming down the pipeline. And so, you know, one of the things that I like to tell all of our clients and your listeners, you know, I do put my money where my mouth is too. And not only am I selling build to rent, but I'm keeping build to rent. So, you know, for my own portfolio. I wish I could keep it all, but I can't. So we're still seeing that it's a good time to be doing build to rent for really two reasons. You know, and they really come back to some of the fundamental reasons that we started doing build to rent to begin with, which is that we still have an extremely low maintenance and turnover cost, which makes the cost of ownership of build to rent, so new construction properties, so much less than the older turnkey properties that we had done in the past. And, you know, for those of you who've heard me on the show before, you know, I started out buying properties at the foreclosure auction, renovating them, leasing them. And these houses were average 50, 60 years old. And no matter how well you renovate those, it does still come with a lot of maintenance issues. You just can't renovate a house to be like a new house.
Well, so Chris, let me just jump in right there, because you're making a really strong point. I just don't want to make sure it doesn't get missed. When you, of course, as a homeowner, when you go buy a brand new home, then everything's new. Nothing's worn out. Everything has a warranty. And so as a real estate investor, when you buy a brand new property, you receive the benefit of that as well. You don't have as much deferred maintenance. I mean, you know, things go wrong, but most of those things can be covered. Of course, tenants can tear things up. That's a different issue. But in terms of the basic bones and structure of the asset itself, it's brand new. And so that improves your profitability in the early years, and it's one of the big advantages. And sometimes when you pencil the numbers just based on the property and the rent and the mortgage and the expenses, and you make an estimate of expenses based on your experience with older product, you have a bigger allocation based on your experience for maintenance, and you don't have quite that same level of expense in a brand new property. And I know you said that, but I just wanted to highlight it because it's a really, really important point. So please continue.
Absolutely. I mean, and that's the key there. And on top of that, just the fact that it's all new, the product is designed for tenants in mind. So, we do granite countertops on all the hard surfaces, vinyl plank floors. So we don't do carpet anywhere. For anybody that's out there listening, that's a landlord currently, if there's carpet in their home, they know that, when that tenant moves out, you're typically either replacing the carpet or you're going to get a little bit less rent because the carpet never looks great the second tenant go round. And so, so we've removed a lot of those things from the equation. And so, not only do you have just the general mechanical factors that are going to be less costly because they're brand new, but you have the maintenance or the turnover cost as well, where, no matter whether it's a new house or an old house, you are going to have a tenant move out at some point in time. And so, the ability to turn that home over faster because there's not as much to be done, and B, not have to replace as much during that process, all leads to, higher return on investment.
Yeah, so I'm going to jump in a little bit because we did cover a lot of this in the Build to Rent series. It's all great information, but her specific question has to do with current market situation. So to just reiterate what you said and add one additional point so people understand, Stephen Covey says to be effective in 7 Habits of Highly Effective People, always begin with the end in mind. When you build a product with the end in mind, this is an investment product and you're designing it to be low maintenance with turnover of tenants, then that's another advantage of build to rent. And of course, when you have a brand new property, it's more appealing to the tenant base. So all things being equal, if a tenant could live in an old property or a new property, they'd probably rather live in a new property. And so there's a few other things we could talk about, but I'm going to set those aside. Let's talk about the current market situation.
Sure.
Now, markets, everybody knows real estate is local, and it's not just like a big metro. Like you're in the Jacksonville metro. It's a big metro. Inside that metro, there are submarkets, neighborhoods. And when your boots on the ground, the difference between the war zone and kind of where the line is drawn, and you switch over and all of a sudden it's desirable. And of course, the advantage you have as a property manager is you kind of know where the demand is and where it's really at and what the price point is. And I don't think it's a secret that Florida has been a huge recipient of inbound migration as people are fleeing the Northeast and high tax, high expense. And with COVID, they discovered that they could work from anywhere. And then you got the baby boomer generation, and not everybody who moves to Florida wants to live in South Beach, right? There's other areas of Florida that are very appealing with no state income tax and, big metro major sports teams. I know my nephew plays for the Jaguars, at least as of this recording. We'll see how it goes after they do their final roster cut, but I'm hopeful. At any rate, and then the other thing too, Deborah, that anybody that's concerned about this, we did an episode with John Burns from John Burns Consulting. And John Burns is a guy that is an analyst, a consultant to the building industry, home building industry in particular. And they told us on that episode, it wasn't all that long ago, that build to rent is the single hottest niche in housing right now. And so there's a lot of smart people out there that think it makes a ton of sense to build right now, but you got to get the market right. And you got to get the demographic right. So maybe, Chris, take a minute and talk a little bit about Jacksonville, because we've talked about Jacksonville in the past, but here we are in late April of 2021. We're a year removed from when COVID just slapped everybody in the face and we weren't sure what the future was going to look like. We've got the big lumber and commodity and labor issues in building. Talk a little bit about kind of what's going on in your market today, and then in terms of what's going on with your supply and labor costs and how that's affecting, or if it's affecting, anything that you're doing at all.
Yeah, great question. And as you know, we build in Jacksonville, but we also build outside of Atlanta. We build in Palm Coast, Ocala, Cape Coral, Fort Myers markets. And so all of those are affected in slightly different ways. We're seeing this massive surge in demand across the board for single family residential, but also any other sort of residential, and everybody's trying to get the same materials. So there's a finite supply of lumber and cement and electrical wire out there, and everybody's trying to get those supplies to build these
And
homes.
Chris, I'm sorry to interrupt, but do you see that as a function of inflation and there's plenty of supply, or is that a temporary disruption in the supply chain because of shutdowns due to COVID, and the inventory is going to eventually come back and prices will stabilize? Do you have any insight into kind of the pipeline?
Yeah, so we think that prices are probably going to stabilize at this point sometime, in early 2022. We're seeing increases in lumber, all the things that I mentioned, but we're also seeing increases in land cost as well. And we're to a point where we've finally started to see some people pull back and say, hey, you know what? Like apartment complex builders, some of those guys have pulled that back and said, hey, we're not going to build that apartment anymore. And those are the kind of factors that we need to see a little bit of that in the market. And oftentimes you're seeing the people that are paying top dollar for land, and are paying, top dollar for the cost of the build. Those are the ones that are pulling back, so the people that are building one house, I'll give a very anecdotal response to this, but like there's a fella that bought a lot near my house in Umatilla, and great lot, beautiful lot, cleared it, graded it, but he's going to build one house, so he has no buying power. He has, no relationships. He literally cannot get the lumber to build his home. And if he did get the lumber, it was going to be so expensive that he couldn't, that it wouldn't work. It wouldn't work for his financing. So, we're seeing a lot of those type of folks, or people that just really went out on a limb and bought the high dollar lands that were really working on a thin margin. And those are the ones that are really having to put the brakes on right now. And so for us, what we did was over the past 2 years, we went out and bought a lot of land positions. So, we have a private equity fund that's essentially a captive finance vehicle for us. And we were able to go land bank a lot of lots.
So your cost basis is in the past because you already bought the inventory when it was less expensive.
A portion of it is.
Yeah.
So our land basis is in the past, but we still have to buy lumber today, just like anybody else.
Right.
Fortunately, now we're still getting hit with huge lumber increases. I mean, lumber is up right now today 345% from this time last year.
Boy, that's insane. A month ago, it was 240%. So it's still accelerating.
It's still
and that's shortages, right? I mean, this is what we're having. It's supply and demand.
It is. There's two things going on. There were definitely shortages. There are still shortages, but there's also the mills are booking record high profits at this point in time. So it all started out with COVID, and and that accelerated, and then the acceleration of the demand, accelerated the issue. But now, it's kind of hit a level point, and people are still buying that lumber, and so they're keeping that cost up. So, we get a lot of feedback from the lumber suppliers, and we do think that, 2022 is when we're going to start to maybe see it, come back down. We're cautiously optimistic that it's at least going to level out. And so, we're really leaning on the fact that, we had bought some great lands, at great land prices, to offset some of those cost increases. Now, we've still had to increase costs significantly, which has caused some yield compression right now. And as you mentioned earlier, we're seeing the fact that, the materials cost is really the leading indicator. The rental increases is a bit of a lagging indicator of what's going on. So, you actually have to get the houses out of the ground at the higher cost basis for people to, to drive those rent prices up. But that's already started to happen because some of these higher cost properties are coming online right now. And in addition, there's a lot of money hitting the street right now, that's helping drive up some of the rental rates because there's so much stimulus out there. So
we're seeing some of that in Arizona. I mean, it's not just stimulus. I mean, I guess that's on the rental side, but you've got the people that are selling homes in California and coming to Arizona and finding a home for $600,000 that would cost $2.5–3 million, in Silicon Valley. And so they're able to buy it, they're able to bid it up, they're able to outfit it, they pay cash. I mean, it's just insane. And
Oh
are
yeah.
you seeing some of that and I know that your product type isn't in that niche, but are you seeing this migration situation? I mean, what's going on population wise
Yeah.
in your
Massive
space?
migration.
Yeah,
Massive migration to Florida right now, and in really every single one of our markets. And one of the areas that you wouldn't really necessarily think of, you think of Jacksonville, you think of Orlando, you think of Tampa, you think of Miami, but there's all of these smaller towns and cities within Florida: Ocala, Palm Coast, Cape Coral, Fort Myers. And these are markets that we spend a lot of time in. And a lot of people are going to these smaller areas. We just recently opened up in Inverness and Citrus Springs. Well, we've got two great things going on. One is there's not a lot of supply there of new construction for rent. There's a lot of people building homes to live in, but not a lot for rent. So, these people that are coming, from out of town, and they're trying to decide, hey, where do I want to live? I want a little bit slower pace, and I don't want to live in Miami. And so they're trying to find what works for them. So we see a lot of people coming in from out of town, out of state, that are renting houses and trying to figure out where they want to be. We also see migration from some of the larger cities within Florida into some of the smaller cities. So that's been an interesting dynamic that's happened since COVID, because people can work wherever they want to. So we're seeing huge trends. We've never been as busy as we are right now in our leasing department. And the applications are just flooding in. Our leasing department has had to double, and we're still having a hard time keeping up with all the flow of applications coming in. And these, and we're leasing, we'll lease well over 100 houses this month. And to really great applicants. Now, don't get me wrong. Half of the applicants that are applying are getting rejected, but we're
well, at least they're applying. At least you've got a pipeline. Yeah.
Exactly.
Okay.
So we're seeing great fundamentals in the market: population growth, rental growth, and we see the rental growth continuing to accelerate. So when we look at that yield compression, so get back to market conditions, and I think one of the questions was what sort of cap rates are we selling at? Our cap rates right now are somewhere between a 5% and a 7%, depending on the product and the market. And what I'm looking at is what are the rents today? And so when we sell a property, we're saying this is what it's renting for right now in this moment in time. And we're selling it based on what we think our cost is going to be when we get a permit to build that house. So we've already baked in the inflated cost, but we aren't baking in the inflated rent to go along with it.
Gotcha. Yeah.
So, as these rents catch up, while the yields might be slightly compressed right now, we see that as going to expand as those rents catch up to the build costs.
Yeah. Okay. Well, we could go on, and I have a bunch of questions, but maybe we'll take that up in our boots on the ground update, which we're going to do in a little bit. But let's move on to the next question here. And I guess, Deborah, just in closing for you, and probably anybody else that has this question, because this is the most fundamental question there is when it comes to real estate investing: does it make sense? The only way to really know that is you look at the macro picture, and the macro picture, according to John Burns and Lawrence Yun, who's the chief economist from the National Association of Realtors, there's a huge supply or lack. In other words, there's a huge need for additional supply to come on the market of homes. And so the question is are people going to buy those homes? Or are they going to rent those homes? And we're becoming more and more of a renter nation. Although I think that may change as the baby boomer, the millennials kind of make it their way through the cycles of life. But certainly for right now, you've got that going on. And of course, a home that you could rent, you could easily sell to a homeowner. So it's like you have multiple exit strategies. So, but you just got to look at the individual deal, crunch the numbers, and ask yourself if the things that are driving the stability of the asset are going to continue to exist in that particular marketplace. And I think everybody knows that Florida has been red hot, and Jacksonville in particular has been a very hot market. But of course, as you mentioned, you're in other markets as well, which is nice because you have that bigger viewpoint. Okay, so let's go to this question from Belinda, and Belinda's in North Carolina. How do I get started with just 100,000? What are my lending options for a first-time investor? What areas do you service? What are property management fees? Okay, so that's a great, beginning investor. I think, at your price point, probably $100,000 is enough for a down payment and cash reserves and responsible landlord ownership. And of course, we still have the benefit of bonus depreciation right now for the next year or two. But what say you in terms of the price point? Is
Sure.
$100,000 enough for someone to come in, and what kind of lending options and what areas are you in?
Absolutely. So 100,000 is more than enough to get started. And I would say if this is your first investment, I would recommend really taking advantage of the Fannie and Freddie options, which, you can buy up to 10 buildings, 10 single family buildings, and Fannie and Freddie consider a single family building anything 1 to 4 units. So, you really want to take advantage of that because you're going to get the absolute best interest rate. Right now, for investor loans, I think Fannie and Freddie are requiring a 25% down payment. To put that in perspective with your, $100,000 equity investment, we build properties from $200,000 to $600,000. So you fit within the vast majority of the product type that we're building. To really kind of have your pick. You could buy single family homes, duplexes. You could possibly even buy some quadruplexes in some of our markets with a $100,000 down, 25% down standpoint. So I would take advantage of that first. And the interesting thing, obviously, is if you buy a duplex and you're getting 10 duplexes, because Fannie and Freddie consider those to be one single family building, then you're getting 20 units at very, very attractive rates. Or if you buy 10 quadruplexes, you're getting 40. So that's something that a lot of our investors are taking advantage of is that 1 to 4 unit rule right now.
Yeah, and then we have a lender in our world who can, once you hit that 10, they can come back in and put a portfolio loan on that entire portfolio and free up another 10, and you just repeat the process. So Belinda and anybody out there, I mean, I was in the mortgage business for a long, long time. And one of the biggest mistakes people make is they go look at the real estate, they get into contract, and then they go look for the financing. What you want to do is start right away working with a mortgage professional to review your entire credit file, which means your credit score, your income, your ratios, your debt to income ratios, your cash, sourcing your cash reserves, and then making sure you know exactly what you can qualify for, and then having a conversation with someone like Chris and looking at what they have available. And at that particular point in time, that's where you figure out what the rents are, the projected rents are, what's going on in the market. And it's really easy to figure that out. You just go out in the market like you're a tenant and look around and see what's available. That way, nobody can, blow smoke at you. It's really easy to get a feel for what the market is really like by just going out there and acting like a tenant and looking for a comparable product. And then the only other thing she asked about here was property management fees. How does that work in your world with SunCoast?
Sure. So anybody that buys a new construction property from us here at Southern Impression Homes is going to be charged an 8% property management fee based on collected rent. So we don't charge a management fee unless we collect the rent for our landlords.
Great. And I think that's money well spent, right? Compared to the brain damage of trying to be your own landlord property manager. Okay, great question, Belinda. Thank you very much. Let's move on to Emmanuel from Brockton, Massachusetts. Do you buy shovel-ready land? And if you do, who do you buy it from?
Well, buying shovel-ready land has become harder and harder these days. Most of the time, I'm actually a seller of shovel-ready land. And
And take a time out, Chris, and just, I
yeah.
mean, shovel ready is probably not a technical real estate term, but there's raw land, which has to go through a whole entitlement process before you can put a shovel to it and actually do anything. So, when you say you're a seller of shovel ready land, just kind of describe the way you're
Sure.
using the term shovel ready.
Sure. So in our world, in the development world, that's typically where shovel ready that shovel ready term is used. And what that means is that a property has been entitled, meaning that you've gotten the correct zoning for whatever it is that you want to ultimately build on the property, and you've done all of the civil engineering for the horizontal development of the property. And what the horizontal development is, that's when you
Sticks
turn
and bricks.
well, it's when you turn a field, into a neighborhood, meaning that you go and you put in all of the roads and infrastructure. So you're putting in the water and the sewer and the electrical, and you're laying the asphalt. And so when you have all those permits in hand so that you can go do that work, that's what is considered a shovel ready deal. And then once that's done, then the next phase of shovel ready, once the horizontal development is done, is then then you have a lot. So then that field was then subdivided into multiple lots, and now you've got a shovel ready lot, meaning that somebody can go actually build a vertical structure, a home or a duplex or a quadruplex or whatever the case may be. So when you say, do we buy shovel ready land? We absolutely love to buy shovel ready land when we can get it. But most of the time now we're having to do all the hard work, meaning that we're having to go put the land under contract, go through the rezoning process. So talking to all the council people and the planning and zoning people and the development services people, getting them to agree to what we want to build. Then the property is zoned. And from that standpoint, then we take it to our engineer and they go through the whole process. We have to get permits from the district and the Army Corps and all of these different municipalities. And once we get all those permits together and are shovel ready, that's when we go and develop the lots. And, Russell, what I mentioned earlier, sometimes we sell shovel ready lots. A lot of our communities are very large. So, we've got one in Jacksonville right now that's 800 lots. Well, we're not going to go build 800 build to rent homes in that community. So, sometimes we'll develop lots and sell them off to other national home builders so that they can start building the homes. And sometimes we'll sell off chunks of shovel ready land, meaning that we've already entitled it, engineered it, and then they can go develop it, so that we have a nice mix of homeowners and renters in a community.
So since we're on the topic of land, I'll toss in a question that I have. And, with our new administration, one of the first things that happened is a whole bunch of land got taken off the market all across the country. And I don't know if that has had any effect in any of the markets, that builders operate in, or markets that you personally, operate in. But have you seen any impact from new policies with regard to the ability to purchase and develop land in your particular markets?
Yeah, so not necessarily related to the administration, but in Florida in general, we touched on the supply issue. There is a very serious lot supply issue, particularly newly developed lots. And there was a policy change here at the end of the year where the Army Corps of Engineers is no longer handling state waterway permitting. So in Florida, 50 to 60% of the development projects are touched in some way, shape, or form by state waterways. Well, the Army Corps of Engineers transitioned that over to the FDEP. Well, the Florida Department of Environmental Protection took all those files, and from what I understand, it was semi trucks full of files that just went over from the Army Corps to FDEP, and so they're working their way through that. But we've now gone 5 months without having a Corps / FDEP permit issued in the state of Florida. So, to exaggerate or to exacerbate the lot supply issue, we're going to have 50 to 60% of the subdivisions are permitted are still on hold right now, waiting for these permits, which is going to make the supply issue, from a land perspective, even more difficult in Florida, over the coming years. So, what I've seen is land sellers are wanting a lot more for their lands. And we've seen that the process to get land entitled has gotten a lot slower. Again, all of which for people that own land and own real estate is a great thing. It's going to drive up those values for us, for several years to come. And I got to touch on this too, because you made me think about it when you were talking about supply. And is this the right environment? Supply is very, very tight, and as fast as the homes are being built, they're being bought. But the interesting thing is, like, I take our 5-county area here in Jacksonville, right? We'll probably finish 12 or 13,000 building permits this year. And we would probably do more, but there's not enough lot supply. To put that in perspective, in 2005, when everything was way overbuilt in Florida, they were between 18 and 19,000 permits in that same area. So we've had 15 years of population growth, and we're still nowhere near the amount of permits that we were, back in the 2005 time period. So supply is a continuing issue, and based on the reports that I've seen, there's not really a way for it to get caught up with the number of developments that are in permitting right now. It's going to continue to be an issue for some time to come.
Well, this is why you want to move quickly, because you want to be on the front end of that wave that continues to build, and you can ride it for a while. And one of the things that's interesting about real estate is that often, once the price drivers get in there and push a price up, even when those drivers recede, the price tends to stick. And there's a reason for that. One is the psychology of the sellers and the marketplace. It just establishes a new baseline. People don't want to sell, and people are willing to pay based on peak value. Doesn't mean that things can't retreat, because they can. But the second thing, and I write about this all the time, is that the lenders and the banks and the agencies behind them are typically holding loans on those properties at those price points. And they have a lot of incentive to keep those prices inflated, or the collateral goes bad and implodes the mortgage-backed securities market. And they're very afraid of having another 2008 event. So this kind of goes back to, is it a good time to buy? When you've got all of these factors here that are still underneath pushing prices up, and you've got migration patterns that are making capacity to pay and demand there, then you've got a good formula to create short-term gains, that some of which will stick. And if you're paying attention, if the market does start to turn, you can probably exit fairly quickly. In a hot market, you don't want to be the last one to shut the lights off if all the wave recedes. But again, this is why we pay a lot of attention to the markets, and we do these boots on the ground updates, and we talk to the experts, because you live in this market. You're in there every single day. You're looking at these pipelines. And I love the fact that you're on the property management side, not just on the, hey, we'll sell it to you and good luck, but we're going to be with you and keep the income flowing, because that's part of our profit model too, and that you eat your own cooking. So I think that's all good. Okay, so I think now, here's a question. This is from John in Marshall, Minnesota. Minnesota's been a crazy place lately. With spiking lumber and other commodities costs, can new build investment homes sell cash flow and make sense? Well, we covered most of that. Let's just talk specifically about the cash flow. If somebody comes in like Belinda, and she comes in and she does a $250,000 whatever duplex or whatever you've got, and she puts down her 25% down at today's rates and today's rents, how's the cash flow on that? Would that thing cash flow?
Yeah. Our clients are seeing cash flow on every single one of the product lines that we're selling. And, that cash flow varies depending on the market, depending on the product type. So, we see slightly lower cash flow on our single family homes than we do, say, our duplex or triplex or quadruplex. But, the single family homes are going to see a little bit higher appreciation than some of the multifamily product. The multifamily is really only going to go up based on rent increases, which we're projecting. Single family is going to go up, obviously, due to market value, not just the rental increase, because it can be sold either way. So short answer is yes, we're seeing cash flow on every single one of our asset types, and we're seeing rent growth. I'll give you a great example. One of our clients called me the other day, and he said, Chris, he goes, man, He goes, this has been phenomenal. He said, I bought a quadruplex from you. And he said, you underwrote the rents at $800 a month. And he said, there's 4 units. He goes, you're now renting each one of those units for $1,000 a month. He goes, it's like I bought 4 and got the 5th one for free, because each unit went up $200. So he got that 5th unit for free. So the rent growth is real, and I can't stress that enough. I mean, that is one of the things that all of our clients have seen, that they're, again, to your point, you lock in at today's prices, today's debt, and that number's locked, so your cost is fixed. And but the rents continue to go up.
Yep, there's still definitely money and demand flowing into the market, and that's a lift. So if the earlier you can get in and lock in, the better your chances are to ride that wave. Okay, so we have one more question, except that it's from an engineer friend of mine, an Inner Circle member of our syndication mentoring club, and he's got 12 questions. So I don't know that we're going to hit them all. I almost feel like we could take a break and start a whole new video and just address these questions. In fact, let's do that, Chris. Let's take a break, and we'll make a part 2 of this. So, because it's just, people can only watch so much video, right?
Yep,
This is all
yep.
great stuff if you're super interested, but this is like going to, a movie. And so we'll break it down, and that way it's a little bit digestible, and we'll come back and take on these questions. So folks, if you're interested in contacting Chris, the contact information is down below. If you are interested in watching the Build to Rent series, just send an email to btrseries@realestateguysradio.com, and you can kind of get up to speed on the whole world of Build to Rent. And then we'll also put a link in the show notes below to the podcast episode we did with John Burns and John Burns Consulting, because I referenced that. And of course, a link to our special reports library, where there's all kind of reports on this and markets and other topics. Okay, so we'll come back with part 2 and address all of these 12 questions in a separate episode. So folks, thanks for watching. Chris, thanks for contributing, and we'll see you in the next video.
Thank you, sir. Good to see you.
Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.